All right, with Netflix stock now above $900 a share, some on the street believe a stock split is imminent. And our next guest is one of those voices. Joining us now is Ken Mahoney, Mahoney Asset Management CEO. Ken, it's good to see you. So listen, we've had an incredible run right here in the market. No surprise, there's probably a lot more names in that triple-digit category. So that means what, Ken? More splits on the way?
Yeah, Netflix is used to this. They did this back in 2004. They did it in 2015. 900 something. I mean, look at Nvidia. Remember Nvidia this past summer, June 10th, they did a 10-for-1 split. The stock was like $1,200 a share. I know you could buy fractional shares, but people don't want to buy fractional shares. I want to buy 100 shares of Nvidia at 120. So there's a good precedent that once a stock gets over 600, in this case, Netflix over 900, to do a split. And by the way, after Nvidia did their split in June, you remember just a few months later, and now back in November, they got added to the Dow Jones Industrial Average. Hint, hint, Netflix, maybe you can be part of the Dow Jones Industrial Average, that prestigious group of 30 stocks.
So Ken, is there anything sort of, when you're looking at stocks that could potentially split, is there sort of a formula that you can apply, or is it more just like a sort of gut feeling that's also based on patterns for the company in the past?
Yeah, I think it's more, first off, it's a good sign. Look, a reverse split is just the opposite. They take shares away from you. I'm reminded like 1990s, you start off, let's say 100 shares of Microsoft. By the end of the decade, you had 1,600 shares, 100, a 2-for-1, 400, 2-for-1, so forth. So a lot of investors like that. I think you start getting over $500 a share. Institutions don't mind, right? They buy and they buy percentages and they overweight, underweight. But for most retail investors, I don't know, starting past $500 a share starts feeling like they should be doing some type of split, and something that's easier to digest. So again, I don't have a specific formula than say probably over $500 a share, but for the companies that want to get into the Dow Jones, remember that's price weighted, which is kind of wacko, which means you cannot put Netflix as a Dow Jones component at $900 a share because it would overweight so many other stocks are trading $120, $150 a share.
I wonder, Ken, for viewers who are listening out, I mean, I just wonder if there's any actual research that would tell me, okay, a split, long term, 3, 5, 7 years out leads to outsized returns. Because my guess would be, Ken, it probably doesn't, because the optics don't change the fundamentals. It doesn't change what you're earning, the PE, right?
Right, and that's to be said. So when you do a 10-for-1 stock split, the example I gave in the video on June 10th, you had 100 shares at 120, $1,200 a share, and then he split it. Okay, so great, but you're right. On that same day, the market valuation did not change at all, right? Even though it felt good to have more shares. But again, for a stock to be able to split consistently, I also kind of think that the earnings are pretty strong also. I mean, you can't split a stock at $45 a share necessarily for the stock to go higher. But again, I'd like to see that report as well, my friend, to see what that looks like longer term. It may not have a lot because it has a lot to do with earnings, as you suggested, and buybacks and supply demand of a stock and a sector and so forth. So maybe stock splits don't have enough, but it does bring a different crowd. I mean, even in the video when they did their split, they said, we recognize we'll bring a new crowd of investors which are not going to buy the stock at 1,200. So that's still worth doing something for good PR for the company to recognize it's out of reach for the average investor, and for the company management to say, like Netflix, also we think the next few quarters during their earnings conference call, they're going to split the stock. My guess, it's just a guess, 10-for-1. So instead of $900 a share, $90 a share.
Are there any other stocks that you're watching right now as potentials here, Ken?
I think Meta's up there 600 and change. Microsoft has a strong history. They're 440, 450. So those are the ones that kind of stick out. The biggest one this year, obviously, was Chipotle. I mean, a 50-for-1 stock split. You had to sit there with a calculator to figure that out. And that was trading around 3,000. That was kind of out of reach for a lot of investors. So I do like the idea, and I get it. On the same day, it's the same valuation. And for all we know, when you look at down the road, there is no correlation between stock splits and overall performance. But the average investor feels like they're shut out of some of these institutional holdings. But my next one would be Meta, and maybe perhaps Microsoft right behind that.